All right, folks, we are here in the webinar room. Thank you for attending, and we welcome Coach Robin Dayne. She's going to talk to us about developing a trader's mindset. Near the end of the broadcast, before the question and answer, we're going to go through some examples using what she's talking about with our MetaTrader 5 platform that you're all familiar with. So we're going to do some test trades on there and how to psychologically handle those trades. But for now, let's turn the stage over to Robin Dayne.
Thank you, Colin. I really am excited to be here today. We're going to try something different in interacting with the live market, and I'm going to do coaching on the fly so you can get an idea of some of the things that I do when I do personal one-on-one coaching. But I love talking to traders, and I'm so glad that many of you are from Europe, and there are some familiar names that I'm seeing that are my US clients and US people. And so welcome today. I hope that I have put together something new and different. There's going to be some items that you'll be familiar with if you've seen my webinars before, but you will hopefully find at least one thing that helps you in your trading. I always work to have something. Now, we have the chat box open, and we have people from Israel, Germany, England, and a variety of countries. Feel free to type them in there in the chat box, what countries you're in. And take a look at what we're doing from a global perspective. We are now global. You know, years ago when I started coaching, you know, we didn't have the issue of being global. But I found an old radio interview, and I said, before you know it, we'll be able to trade 24/7, any kind of market globally. And here we are. We're at that stage today. And as traders in this market, from the way we used to trade to today, things have drastically changed. So we have to change as well. I'm sure that there's nobody experienced in the room that has traded in the past or for a long time and is trading exactly the same way today. And we have to adjust and change. And guess what? We'll have to continue to adjust and change as we go forward. But the one thing that stays constant throughout everything is the psychology of trading. And the psychology and how your mind processes has never changed. The same dilemmas are there, more have been added, the same challenges, and we have to have our mind in a good position for us to trade at our peak. So I'm looking forward to giving you some of those things that you can focus on to be at your peak. So with that, I'm going to get started. Please feel free to put your questions into the chat box. I will attempt to answer the questions, or I'll say, hold on, we'll cover that because there is a lot of information. And then we will go through some of the services that I have. And then from there, somebody's saying that they cannot hear. Can we do a sanity check? Be sure that your mute buttons are open and you don't have on mute, and check your systems in the right-hand corner that your speakers are on. Are people hearing me? Can you just verify yes, yes, yes in the chat box? Great. So anybody that's not getting sound, it's probably on your end. So if you would check those connections. Thank you so much. Okay, and here we go. Developing a trading mindset. I pulled from a lot of presentations and some of the high-end traders that I've coached, and what was their mindset compared to you know, the everyday trader, or what did they have in common? So a lot of the things are the things that I've found in common. I like to do a little bit of a smile on everybody's faces, and we have a down market today. This is not a picture from today, but have you ever experienced the emotion? Oh no, this can't go any lower, can it? The emotions that come up with the market's changes can be extreme. Somebody said to get their sound, they had to click the presentation window to hear it. So maybe that will help for those of you who don't have sound yet. As always, this is under non-disclosure. I appreciate you not sharing it with anybody in particular, duplicating it, recording it, printing it, emailing it, anything on social media. I really, really appreciate it. I work very hard at my information, and I value it, and I hope you'll value me. Thank you. Okay, so from Broadway to Wall Street, those of you who don't know me, I was a professional dancer at the age of 13 at the Metropolitan Opera House in New York City, and I danced for about 15 years. Yes, that's an old picture of me. I still can't believe that's me. Or I can't believe getting on toe shoes. I was 15 years in high tech in various companies, Digital Data General, 9X, and my last corporate job was 9 years at Digital Equipment Corp as Asia Pacific marketing manager for several products. During that time, I started my work with Tony Robbins, and I became a trainer, a coach, and a special online team when I left the corporation. From there, I became a coach. I ended up having a radio show called Elite Masters of Trading, where I would interview the top traders around the country. I've been 28 years now as a peak performance coach to traders is my primary area, but I also coach athletes and young proteges that are being groomed for different sports, tennis, soccer, lacrosse, and work with kids. I started out in the heaviest day trading firm on Wall Street, and I was there for 3 years to learn to trade. I have many, 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 many funny stories about my experiences there. And to give you an idea, the first trading room that I sat in, I was sitting between two of my clients, and I was there for a week. And they said, "We're going to put you in the last row so nobody remembers that you're here," because I was the only female in the room. I said, "Put me wherever you want. I just want to learn how to trade." I love this business and have been dedicated to understanding it, growing with it every single year that I've been in the business, and exploring different things and noticing different things as I coach people. From there, I was one of the resident coaches at Tudor Investment, a large hedge fund on Wall Street, and I believe they have an office also in London, and have coached everybody from the CFO of the company, managing partners, portfolio managers, and their top traders. I've been in a series of venues, and those are listed. I don't need to go through that. And did an interview way back with Metastock even, which that presentation is on YouTube and on my website. I am currently working with a trading room called the Miller Dayne Trading Room of futures traders, and I only work on the psychology with those traders. So the areas to master are your morning mindset. Oops. Here we go. I lost your screens there for a second. Morning mindset, market prep, trade setup and the plan, trade entry, management, and exits, analysis and modifications, and overall emotional control. These are the key areas that a trader should have in their bag of tricks to control and become a successful trader. And I've lost my mouse. Hold on. Okay, the morning mindset. And again, feel free to ask or let me know if there's anything in particular you want. All of these areas I can really go in a lot of depth, but we're looking to do about an hour of my presentation and then go and have a review of some of the products that I have, go to the live markets, and then have you ask questions. So I'm not going to do a lot of in-depth. If you have questions, please feel free to email me, write them down now, and email me, and I'll be very happy to answer those questions to you personally. So in the high-end traders, or in general, some of the common things that a mindset needs to have at your peak performance is being emotionally calm. Being emotionally calm, be market focused, what's going on in the market, be stress free, because anything from the outside world is going to cause you stress and occupy some of the space in your thinking. So we want to have those really managed, or at least put on the back burner till you walk out of your room, prepared for the trading day, and the ability to detach from emotional distractions, or don't trade. Like, you don't want to be taking care of a 2-year-old and trying to trade at the same time because your wife decided it was your turn, or the baby was sick, or something was happening. That's going to cause stress for you when you trade. The areas that cause stress, and if you were doing one-on-one coaching, we would go through these particular areas if your trading was a little bit off. And those are health issues, family issues, your finances, your living conditions, your relationships, and of course, trading. Any one of those can have an impact. I was coaching somebody and we were really working to get his trading okay, and we kept on running into an obstacle. Well, it turned out to be that he was taking care of his elderly mother, and he was taking her to the doctor, and she was calling because she was stressed out. And so that just spilled over into his stress, and his trading really was having a tough time. So we decided that he should really take a break, handle the personal issues first, because family comes first, and working on getting those to a point where he was comfortable before he went back to trading. So just be aware of everything that you're doing. Be emotionally prepared before trading. Levels of alertness, comfortable environment to trade in, private and quiet, and void of outside distractions. So again, all of these things can be expanded if you were to do coaching. And emotional preparedness for your trading day does include how comfortable you are in your office. It sounds like a simple thing, but make sure you have a comfortable chair. You have good screen visibility, that your environment is quiet, that the color of your room is a good color. A good color for trading happens to be like a sage green. That's a very peaceful color. So even colors can influence what you're thinking or how you're feeling in the moment. So, when I get into somebody's trading and coaching, I try to take a look at the whole perspective. And if something is off, we try to modify it. A bazillion monitors filled with tons of windows and screens is not necessarily the best way to trade, or the most efficient way to trade, or the best way for your brain to take the information, sort it out, and then make a decision. So we take a look at the whole environment. You want things to be as simple and easy as possible. Watch out for avoiding bringing bad trade feelings from the previous day. A lot of traders will have a bad day the day before, and they can't sleep at night. They think about the trades, or they think about the money that they lost, and then they come into the trading room and they're carrying that baggage with them. You can't afford to have those feelings before you even begin the next day. That's no way to turn it around. So again, when we do coaching, we go through a process that eliminates that and helps you remove those bad feelings. And we'll go through some of those when we get to some of the key points here. Are there any emotional stresses coming from that list that we talked about? Don't trade when feeling ill. You've got the flu, you feel like you're getting the flu, your body's telling you it needs a rest. Be warm, comfortable, and don't trade sick. Do you have any time limits? Like if you're scheduled to go to the doctor, you don't want to go and place a trade 15 minutes before you're supposed to walk out the door and have the pressure of grabbing a trade. That means that you're not being mindful of your time limits and you're pushing your trading. If I find a trader does that, I call that pushing. They're pushing a trade and they're too worried about missing out. And so they jump into a trade when they don't have the time. And of course, they don't trade it properly. And then what happens? They go to the doctor visit, and then they come back and they're all upset because they were down money because they had to close the trade too soon. And of course, what happens? The trade worked exactly the way he wanted it to. And so he's frustrated. So, the good news is, or how you would react to that is, I have to go to the doctor. Should I take the trade now, and will I have time for it to mature? If the answer is no, then I'm not going to take the trade. I'll watch and set my target as if I did. And when I come back from the doctor, I'll see if I was correct to verify that what I was looking at really was working. So use the information to help you when you get back. There is always another trade. And traders that rush in and have to take a trade are, again, pushing instead of being mindful, planning, and just deciding when to get in and when to get out. That works best for them for the best profits and for them to manage it. Are you at your personal best? So are you off? If you're off when you're going to trade, the key thing is to ask the question, why? Why am I off? What am I feeling? What's going on? How do I get back on track? Do I feel it's a good day to trade? Sometimes you're just exhausted. Sometimes the baby kept you up all night. Sometimes the new puppy dog was barking all night long and you didn't get the amount of sleep that you needed. Really do a test on yourself and monitor and know if you're in a good place to trade. Bad trades. Always review them, figure them out, figure out the fix, and add any new changes or rules from that information. A bad trade disappears from the mind if there is a solution and a new approach to be taken the next time that scenario comes up. But if you don't do that, don't examine it, then it will fester like a tiny splinter in your finger. So if you don't take the time to get the magnifying glass out, put your glasses on, look at it, and really focus to extract it, it's going to stay in there. And every time you rub it, it's going to give you some pain or discomfort. So approaching a bad trade like a splinter, figure it out, fix it, and then add your rules and changes. That will help you to adjust it. Okay. Thoughts to prep for the day's trading. What do I need to focus on? What did I do well yesterday? Anything you did well, you want to repeat. What's great about my trading? Well, I was trading 5 markets before, and I realized that I was losing in all of them. But when I went back and looked at my losing trades and my winning trades, I figured out that I have one market that I do better in. So maybe that's the one market that I'm going to work in, and that's the market that I'm going to trade and focus on. What's great about my trading in general? I was really happy with the way I planned my trade over the last week, and I'm going to keep that planning because it seems to work for me. What can I do to improve? I really need to focus on the emotional management during the trade, and that's what I'm going to really focus on during this week. What's my trading best? What I mean by that is, if you were the most dynamic, fabulous, incredible trader, what would you be doing? You can actually think your way to the best. The more you think how good you are, and then you're backing it up with your trading, the more that becomes the reality. So you can think yourself well, like in the hospital. If somebody's in there and they're in a critical area and the doctor comes out and they said, well, everything is all right. I did everything I could. It's going to be his will to live that's going to cure him. And if somebody has a strong will to live and thinking to live, they will recuperate, and miracles have happened. The same thing can happen to be your best trader. Market prep for the high end and the peak performance traders have had a market assessment that covers the overall big picture. They start from a larger frame context, and they compare it to the months as it perpetuates forward and grows forward and moves forward to the current day, to the current moment. Past week's activity, they look at what happened then. Maybe they look at volume. Maybe they look at different levels. What's happened from the beginning of the week? How did the week start? Sometimes Mondays happen to be a different type of trading than a Friday, or different from a holiday week. So if you start to capture that information, and I always suggest that you have a journal, and you put in there 3 new things that you learned each day, write that down because there's no slide, 3 new things that you learned each day that will help you trade, and then you reread those three things every morning, that will set you up for the day. And as you start to expand that, you'll find that the learning curve speeds up. So it's a fast way to go through the learning curve, because you will only remember about 30% of what you see. So you'll remember only about 30% in this presentation unless you write it down, you reread it, and you look at it again. What's the overnight action? What happened overnight? A lot of times in the US, we're looking to see what's happened in the overnight session and when the European market's going to close, because we know that it has an effect on volume, and there can be spikes in certain markets. Does it happen in all the markets? No. But you need to learn the personality of the market that you're trading, and the only way that you can do that is to provide focus. Focus on one market is going to allow you to do that. Trading the plan for the day. What are the trends? Are there any announcements or numbers coming? What's the current news? Did Trump just tweet? Did Brexit just have news? So Europe is very affected by Brexit news right now, or Middle East news, or different news within the country. So you want to be mindful of that, and you want to be aware that it can move the market and protect yourself. And basically, as you're in a trade, this is one of my favorite questions: what's the market telling me? Or what's really happening? Any kind of question when you're in the middle of a trade allows you to focus and find the information of the question that you just asked yourself. So what's the market trying to tell me? I look at this, I look at this, I look at this, I look at this. Okay, I can make a decision. The market's doing this. Are there any possible opportunities? So when you're starting the day and you're looking at your big picture and you're getting it down to the current moment, are there any, very clear approaches for a trade today based on what your setup is? Any favorable patterns? Overnight triggers from the day's trading? Are there any possible perfect setups that you see on entries and exits? Identify any cautions. Sometimes a level can give you caution instead of an opportunity. It's something to watch out for. Well, if it breaks this level, it's been testing this level for a long time, but if it breaks this support level, we're going down. Market opportunities. Any particular focus. Your ability to take the mind and focus on an area is very, very critical. Focus will give you a lot of information and allow you to find new things and put it in your book and be able to change something. Focus several days in a row will help you do that. And the market is what it is. Market reality is what it is. Don't put your spin on it. Things can change in a flash. With robo trading, with high frequency trading, these computers are set for certain levels. Why levels are important today. Fib numbers are very important because when the computers hit those levels, they can interject into the market some very large size. Limit markets to the most profitable. So if you're trading many markets and you're flipping around and you're not having success, look at the markets where you seem to have a good fit and it fits your personality. Everybody's personality is different. Every market is different. Every market within the day is different. Within the week, the year, and the time frame is different. You have to find the one that's in sync with you. If the market's too fast and you're really having a challenging time to trade it, then that's probably not the market you should trade, and you should move to something slower, or it'll just take your money. Watch out for putting your spin on the market and the market action. Guessing the direction. Make sure you have specific indicators within your MetaTrader 5, and look for things that they offer you that will give you some guidance on the direction. Don't guess the direction. Have something solid to hold on to. Don't have limited thinking. Broaden your horizons. Maybe check an indicator you never used before. Use it for a couple days. Provide focus on that indicator. Does it give you anything or not? Go through your indicators one by one and do the same thing. Oh, this one was really good. I looked at that all week long, and that one was absolutely brilliant in my trading decision. Or that's something that's on the screen and I never look at it. Take it off. More is not better. Less is sometimes better, depending upon what you're trading. Deciding there's an opportunity with little or no information. Really watch out for that. Don't go in there just to play the game. And a lot of traders will do that, especially new traders that don't have a lot of experience. Well, I can do that too. I'm going to just jump in. Or if they're in a trading room, they see somebody do it, so they trust it. They go in there and they have no idea why they're doing it. Know why you're doing something. Don't be a lemming and just jump off the cliff when you don't know what you're doing. That's very dangerous. And a lot of times, because of the way new people come into the market and get excited that they can, they get seduced by the money and I can do this, or they're very good at a video game and they come in and they think they can trade on a platform and do the same thing as well and figure it out. They probably can, but it will take them time and experience, and they should go in with caution because now your money is on the line. Hoping, wishing, and praying does not work. Trade from data. What's really happening? Again, my favorite question while you're in a trade. Gather your indicator data. Prioritize that data of information of the most important must be there on my list to less important. Sometimes you'll have between 7 and 10 indicators, and the top 4 or 5 will be absolutely critical, and they must be in place for you to enter the trade. The other ones might be nice to have that give you a little bit more certainty, but if you take the trade, it's a little bit more risky. And so you have to measure that over time. You don't hear anything. Can I do a sanity check again on the sound? Do a refresh, if you would, and hit your screen. So if you click on the presentation, then that will do it. Okay, we're good. Thank you. So if you've just people jumping in, refresh your screen or just hit the presentation, and I think that will get you going. Keep your specific and important levels of support and resistance. Know your support and resistance from the moment, the overnight, the day before, critical ones that seem to be hit on a regular basis in a month's time or a longer time frame. You'll hit critical levels of support and resistance. And again, a lot of the computers and the robo-traders are set for that, or retracement levels within your Fibonacci. They're set for that too. So watch out for them. We have to think like the computers and work like the computers, but we got to know those levels. Every high-end trader that I've worked with uses levels. Very, very important. Uses levels. Have a winning expectation. Don't go in there thinking, how can I not lose at this next trade? Oh my gosh, this is going to be a problem again. That tells me if you go into that kind of thinking right away, you have an emotional block. Okay, you're dealing with an emotional block. And emotional blocks don't go away. And your thinking in the moment and reactions are being filtered through an emotional block, and it will change the way you react to a trade. So have winning expectations. How can I make money at this trade? Where could I enter so that my risk is in the proper perspective of my risk reward? How could I enter this trade, and where is my target? Is there enough room? We'll go over that a little bit when we get going in a little bit of the charting. Be mindful of increasing volume. Volume equals volatility equals movement. If you get one of these big whooshes down, you've got a 10-point drop instantaneously. It's from a computer and massive amounts of shares or contracts or something in the market that's pushed it that far, that fast. Okay, after refresh, click on the screen, the presentation screen that was working, and check your own mute button, your right-hand corner on the bottom on your computer, and you'll have to check it through your own system. And you can log out and come back in and check the mute too. Okay. Components for success. You need a solid strategy, and it includes all sorts of things. It includes your solutions for some of the obstacles you had. It includes planning. It includes management of the trade. It includes looking at new concepts, assessments, and analyzing what you've done. You need to have a pliable process, a process from beginning to end that's flexible. And I want you to all become a Gumby, a flexible Gumby. Those of you that are young probably don't remember Gumby, but he's very flexible and he's bendable and things can change. We as traders today have to have flexibility in everything we do in trading because it's constantly changing and we're constantly challenged with new things. We must be flexible and pliable. We're searching for a setup or a series of items that will help us to start with, but they may change. Like I said, your criteria list from 10 years ago is nothing like it is today. So information changes. Be pliable. Have a pliable process. So that means you're constantly evaluating. I have traders that call me and says, I'm almost there. I'm almost there. Almost got it. No, you need to be there. You need to be there, not be on the way. But once you get there and most of your list, your criteria list works, just be flexible to be able to change it if something changes. Okay, Mikey, no sound. Click on the screen, do a refresh, check your own monitors because everybody else is okay, and you'll be good. Refresh again. Market mind synergy. So what we have to do is to coordinate what's in our mind with what we're seeing in the market. So there's a market mind synergy. We have all that information and we've got to add our mind into it. So a market, mind, and synergy. Okay, a solid strategy. It's obvious that any successful trader has a well-defined strategy that works for them a large percentage of the time. Most strategies are built through time, market knowledge, and experience through the unwavering determination to find the best way. So each of you may have a different approach to the market and need to find the best way for you. The one that you have is not the same as what somebody else has. Tediously refining key technicals or your indicators. There are ways to take one indicator and change it multiple ways nowadays so that it can adjust to the trading that you're doing and work well for you. So you'll have the same let's say you have the same indicator and you're looking at it on a 5-minute, and then you change it to a 1-minute or a 3-minute and it doesn't work as well. Or a larger time frame, a 15-minute, and it works even better. So different indicators have adjustments based on the time frame that you're looking at, and you have to find the best ones for you. But refining them is tedious. It's a pain in the neck. So that's why a lot of people go out and they'll buy different strategies or go into trading rooms and find something that's been time tested and try to follow that. And they really don't know what's working. Yes, it could be an internet connection if you're having some challenges. So hopefully the guys who have that issue can work it out. And I believe it's being recorded, so you should be okay. So the analysis and adjustments from winning and losing trade results can be your building blocks for your strategy and your criteria. I can't tell you how many people I ask, do you have a strategy and a setup plan that you go into before you trade? And they say no. And I go, well, what's that? That's like what I call seat of the pants trading. They're just jumping in, playing the game, and trying to figure it out when they're in there. No, that's not the way to do it. You must have a series of items, indicators, technicals, rules that you have to place a trade, and what your risk reward is measured by what's in your account, and then go from there. Don't just get in there and just woohoo! I'm gonna just trade and go from there. It doesn't work that way. Honest examination of painful imperfections within one's self. That's probably one of the biggest things that people avoid. I don't like to look at my imperfections. It's very painful. I don't like to look at my losses. I'm trying to avoid it and go to the next trade and make the next trade a good trade. Losing in this game is different than losing anywhere else. Losing in this game can work for you or against you. And so the imperfections within yourself have to be looked at through like a really tiny microscope. And when I do coaching, that's what I look for. But I don't only look for the imperfection. I look for the solution and how do we turn it around or use it. If I have somebody that has a very quick mind, they process information very quickly. Process. They're really good at it. Pick up things, sports very quickly. They digest the information on the screens very quickly. They jump in very quickly, but their trading is not good because a fast mind in this business has the adverse or is missing. Can anybody guess? It's a big P word. Yes, patience. If your mind works very quickly and your mind works on hyperdrive, and that's a good thing, I don't want you to lose that. I want you to have that. Then during coaching, I have to work on things that you can do to have patience. Patience is absolutely critical for entering at the right time. Some of the ways to overcome the patience issue is to have a plan. So if you have a predetermined plan for the place that you're going to enter your trade, what your target is, and what your hard stop is, you have a plan, and you can just do the thing like they do on the commercial for the cooking machine. Set it and forget it. And then you sit on your hands. I had the unfortunate experience early in my career to rush into trades and chase the trades. When I was in the trading room and they'd yell, Microsoft's running, Microsoft's running. And they knew that a lot of shares of Microsoft were going to come through the system from their friends that they used to talk to. Of course, I go in there and I go long Microsoft. And as soon as I went long, the thing would turn around and go down. And I kept losing over and over and over again, repetitively. So I said, okay, I'm going to put up a little note because I was working on the psychology. And this is when I was first building everything. And I said, I'll put up a note because I know questions take you out of your emotion and put you into a conscious mind versus reacting from a subconscious memory. I put a note up that says, are you chasing the trade? And my rule was, if I said yes, are you chasing the trade? Then I couldn't take the trade. I had to stop. I had to wait. So I put up my Post-it note, started working the tune, started yelling, Microsoft's running, Microsoft's running. I read my Post-it note, are you chasing the trade? My answer was yes. I still hit the keys. I took the trade. I said, what is wrong with me? I feel like I'm insane. I know what I'm supposed to do, and I can't do it. I feel like I'm an addict, and I feel like my fingers have a magnet to the keyboard, and I can't stop it. I am just going crazy. So I said, okay, my hands are the problem. So if the first thing doesn't work, you stop and you figure out something else. So I said, I still like the Post-it note thing because it keeps me mindful and it gets me answering yes to not chasing the trade. Don't chase the trade. But my hands are the problem. So I had a new solution, put up my Post-it note, waited. Room started yelling, Microsoft's running, Microsoft's running. I read the Post-it note. Are you chasing the trade? The answer was yes. I sat on my hands. I literally sat on my hands for about 3 or 4 trades until I broke the pattern. Sat on my hands. I felt like an addict, needing a fix. And I had to stop my body from reacting. That's why I said mind, body, and market are all connected. So if the first solution doesn't work, go to the second one. The second solution doesn't work, you go to the third one. And you go until you find a way to fix the challenge that you're dealing with. And patience is one of those things that you have to learn how to breathe. You have to have reasons not to enter the trade, and you have to stay away from the big one, which somebody just typed in there, the fear of missing out. That means you are processing through an emotional block or fear. A solid strategy. Success comes from hard work to create a well-defined strategy that covers a beginning, a middle, and an end for the trade execution. The market tested daily under the scrutiny from results and adjustments to fine tune. So there's no strategy that works 100% of the time. If there were, we're all seeking it, but if it was out there, we'd all be trading it. It doesn't exist. So you're not going to have a strategy that works 100% of the time, and that's where your Gumby or flexibility, being pliable, has to be there. So if you come from a profession, doctor, attorney, engineer, where perfection, airline pilot, where your perfection was very, very important, you have to learn to relax some of those key things in order for you to trade, or you'll never take a trade. You'll wait for so much certainty, so many things to be in place that you'll never take the trade. Now, I do have people that are engineers, and they've taken the route of building their own executable automatic process, which systems can do nowadays to do that. But it's a lot of work. Unless you're a programmer, it's very difficult. So we rely on the platforms that we use to give us the information that we need. So adjustments need to be made. Keep looking for them, and common observations of top traders have revealed that they have a relentless driving force for ultimate perfection. The reality is, will they ever get there? They may get there to a level of success, but it will never be 100% perfect all the time. They have to leave room to be pliable. And that's the thing that I saw across the board with high-end traders, that they had that flexibility. The strategy. If you're not getting a strategy and you're getting very frustrated, this is like without a strong mental fortitude to do whatever it takes to define your strategy, a trader can feel as if he's searching for the exit in the MC Escher room. You don't know which way which way to go in, which way to go out, where the exit is. Are you going up? Are you going down? You're in total confusion. So defining your strategy is a critical point. Okay. Mental prep for your strategy. What mindset is needed to create a solid strategy? These are the common mental strengths. Without them, can lengthen the time to accomplish the end goal or your profits. Focused on winning, your determination and being persistent to do whatever it takes. Honesty and kindness. You can't afford to beat yourself up because you are your best friend, sometimes your only friend when you're sitting and trading, and you must be honest with what's going on. If there's something wrong, there's nothing wrong with that. Just identify it, deal with it, fix it, and go on. Flexibility and openness, void of ego. Don't prove that you need to be right against Mr. Market. If Mr. Market throws you a curve, be smart enough to minimize the loss and maximize the profits. We all have heard that 100 times, but are you doing it? Don't let him take your money when you know he is. Respect and be grateful. Have gratefulness for what you're doing. Have respect for the markets. Losing has a different meaning and impact in this business than anywhere else. Make losing your best friend. Learn from every error and be mindful of it. Losing can result in a positive change and key adjustment. You could have the biggest quantum leap in your trading from results and a fix from a loss. Repeated losers and patterns should be reversed. Any pattern that you've got in there, and I always use this story. I had a trader call me and says, Robin, I can't do anything right. I took 7 trades today. I can't do anything right. I said, okay, so tell me what you did wrong. You lost at all 7 trades? Well, no, I lost at 5 and I made money at 2. I said, okay, tell me what happened with the 5. Well, I did this, I did this, I did this. Oh yeah, they're all the same. I said, okay, so we went through that. I said, now that you made me the list of what you shouldn't do, don't do it again. But I can't stop. He's locked into a pattern that's coming from his subconscious memory, and he has a very clear block. Then I say, well, what happened with the 2 trades that you won at? Can't remember. So one of the great fixes and one of the great things to move forward is to look at the losers, to understand what you're doing and understand if there's a pattern to reverse it, and looking at your winners, because those are the things you want to repeat. Those are the markets you want to trade. Those are the setup features that you want to include. Focusing on the positive aspects within and adds to strategy, and adds to a strategy that works. Knowing the why behind each of your strategy is important. Fall in love with your losers and make them small and inexpensive lessons. Avoid the desire to prove that you're right. I can't tell you how many people hold on to their ego and I know this is the right place. I know this is the right place. I'm going to prove I'm right. But then they just see their P&L going down and down and down. And then they get into so much pain. They finally exit. And what happens when you exit? It turns around and goes up. Trade setup. Have a specific criteria, make sure it's well defined, make sure it's time tested, make sure you have results that are proven and you're tracking. A lot of people don't track the trades. Building strong emotional certainty by tracking really, really helps. Prep, this is all prep for increased sizing. So what happens if you know that you can go into the market and you can lock in between 6 and 8 ticks every single time you take a trade? You don't have to wait for a 10-point move. You can just increase size and get the same amount out of it and reduce the stress. So the length of time you stay in the trade, time-wise, and you should measure How long does it take for my trade to work? That's a good measurement on average. Common losers, what are your best winners? And you should have 7 to 10 indicators. Measuring the opportunities. Be realistic. Be realistic. What you are seeing. Okay. Be realistic. So in this example, I'm just showing you a box that I had drawn on one of my charts. And in that box, there is a support level and resistance level in the blue box. Now, I don't have the numbers there, and I don't know if it's 2 points or 10 points from this picture. But you should know if you're coiling up and down within a range, and you should know if that range can give you any opportunities. So if you were going to trade within the block, within that block, and the range was, let's say, 10 ticks, then you could get in towards the bottom and go long, and you could short from the top. If you go to exit out of the box, you have to be careful, because then you're going to have a down move. And what this is, it broke support and it went down to the next support level. And that becomes an opportunity, the edges of the box. But you would know that through time. So analyzing what's happening in the moment and what you're seeing helps you determine where your trades are. Avoid the hope, wish, pray syndrome. I hope it's going to go this way. I know it's going to go this way. You can't get 10 points out of a range that's only 2. Be realistic. So the top of the box is an opportunity, if it broke out of the top, possibly to go long, and the bottom for if you're going to take a short. And so different opportunities based on what your charts are. A lot of information more has to be given here. Okay, also keep in mind, volume creates volatility, creates motion. So in this instance, here's where volume affected the market. And there was a huge spike. Huge. Be careful of volume. Make sure you're using hard stops. Review winners and losers. Refine and review your indicators. Minimize the number of indicators. Test and fine-tune. The goal is results and confidence, and track the details. Well, I think that's a second one. Don't do seat of the pants trading. Don't have more losers than winners. You need to make some adjustments. Watch the drop in your account. If there's any money drop, if there's a buildup of emotional blocks, don't trade from your P&L. Make sure anything related that has a dollar sign is removed from your eyesight. As soon as you have a dollar sign in your eyesight, it's going to affect your emotions. And don't be another statistic. Your goal is to a bad setup, no confidence, no certainty, and no consistency. So you got to watch out for that. Avoid getting hooked. When there's a trend up or down, at some point things will change. So in this area, knowing the difference between what I call a breath and a reversal is something that you have to practice. So in this instant right here, we had a down move off the beginning of this chart, and that blue had a little up move. But in general, it was having a down direction, and I call these breaths. So it goes down, 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 and then takes a breath. Down, 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 takes a breath. Down, 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 takes another breath. And then at some point it finds support. So we have to know the difference between a breath. Can we read the market well enough to know, are the breaths finished? Oops, I'm sorry. Can you bring that back? Oh, thank you. And the difference between a reversal. So here's a reversal. The new blue bars are a reversal because it's taking out the highs, and we'll go to a live market and show that. I'm trying to get through these slides so we can do that. You can ask your questions. Okay. So being at your peak performance and having a setup adds to your confidence, allows you for speedy exits in market shifts, helps in reading the market, uncovers bad patterns to quickly reverse, and is a realistic foundation. Always measure what are my risk rewards. Pliable process. Be the Gumby. During the trade entry, management, and exit, emotional gyrations can run the gamut from totally calm to frenzied anxiety. Successful traders stick to the rules they've developed. Most rules are put in place to protect capital. Rules take the thinking out of the equation. When you have a hard, fast rule, it takes the thinking out of the equation. Also, rules are pliable, and some rules are pliable and some are solid. Flexibility is a trader's best friend. Okay, in your entries, you should have a plan for where you're entering. Plans reduce your emotions, prevents late or early entries, avoids chasing the trade. Solid rules for your entry. Management. Mindful of reading the markets, making necessary changes, opens for flexibility, increases confidence to add to size if everything's going well, and rules. Exits, hitting target levels, modifying a trade for the market conditions as it moves, taking profits, setting standards, and again, rules for when you exit. Stop rules. Stop rules can be many, 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 and include a whole bunch. Hard stops should be coordinated with trade entries. You cannot afford not to trade with a hard stop. I have never met a high-end portfolio manager or a high-end trader that doesn't have a hard stop. They're doing too much size. There's no way that they can do it and survive. They could wipe out their account in one bad trade. You have to think the same way. You got to get it into the conditioning and the mindset that a hard stop's okay. It's not for wusses. It's something you have to modify, adjust, and try for your trading conditions and how it works for you. Stop trading in the moment for repeated losers in a row. Don't continue to trade one bad trade after another after another. You are trading with an emotional block if you're doing that, and you need to stop and fix what you're doing, or you'll repeat it again because you're functioning from your subconscious memory. How much are you willing to lose in one trade? How much are you willing to lose in the day? Stop trading. How much do you need to lose in the day before you stop trading altogether and stop beating yourself up and reducing your account? Never lose more in a day than you know you can make. So if you absolutely positively, and I'm going to start small numbers. I know there's traders are all different sizes here, but let's say your goal is $100 a day. I'm going to make a game, and I'm going to make $100 every single day, and I'm going to make sure I lock it in. And by the end of the week, I'm going to have $500. Well, it takes a lot of discipline to do that. It's not easy. And I have some games that I use in my coaching that help you do that and help you expand that. But it doesn't pay for you to know you can make $100 a day and the next day lose $500. It's going to take you 5 days to get that all back. Never lose in one day more than you know you can make. I want you to think. Switching to sim or paper. Oh, I hate to do sim. No. Sim will allow you to trade, but allow you to analyze it. Paper takes the emotion out altogether because you're not even hitting the keyboard. I'm getting some sound in the background.
Oh, sorry about that. That was me. I'm going to go ahead and mute it again. Sorry about that.
Okay. All broken rules must be backed up by consequences that are enforced in order for them to work. You can't have a rule, break a rule, and then not do it. So you can't say, I'm not willing to lose more than, and again, a new trader, I'm not willing to lose more than 300 in the day. And if I do, I'm going to stop trading or go to paper. And if I'm too tempted, I'm going to walk away. Or I'm just going to sit down, analyze the trades that didn't work, figure out what I did wrong, to come up with a new plan, and I'm going to emotionally feel better because I have now something to do different. Any habit to be broken must have a replacement in order to have an effective change. So when I was chasing the trade, I couldn't say, I'm just not going to chase the trade. That wasn't good enough. The Post-it note didn't work. I was trying to replace it. That didn't work. Sitting on my hands became the thing or the solution to break the habit. You must need a replacement. So there are a lot of things you've got to think of. A strong desire to succeed in a challenging business, attack problems with determination to do whatever it takes to find a solution, knowing you can weather any emotional downturn and you have the ability to reverse it, a humble control with the seduction of the markets and the way they move, a concrete calm in the throes of unsavory market conditions, and we're getting a whole bunch of that. So we've got to be calm. An account size that will last through your learning curve, a strategy that proves to be consistent and solid a good percentage of the time. That's the key to success. This is the key for every trader, experienced, new, a trader experience that's experienced and new to do on a regular basis. Especially in today's market, it's critical to keep up. The ever-changing playing field presents new challenges for the individual trader. Robo-trades, high-frequency trading, the general market speed requires as much control as possible by letting analysis and indicators do the work for us. So there are a lot of times where the indicators can do the work for us, that we don't have to digest it. In the old days, we had to figure it out. It's still necessary, though, for us to look at those indicators, digest the information that we get from the data, and then make our decisions. So we still need to have a mental process. Trading is 95% emotional. I don't care if anybody says if you have the best system, methodology, mentor, but go into fear, apprehension, uncertainty, hesitation, that can prevent you from taking a trade at all, or taking a bad trade, or reacting badly. Taking control of your emotions and developing techniques to stay on track is mandatory for a trader to survive and succeed. Oops. I don't know what that was, sorry. So we have to be careful. Any bad trading reactions are usually coming from an emotional block. Any type of fear, uncertainty, hesitation, or frustration is a sign of a block. They do not go away on their own, and they will grow over time. Expertise in removing emotional blocks, that's my bailiwick. That is my wheelhouse. That is the thing that I've been doing for 28 years, and I'm up to 5,012 people that I've done a particular technique on, and that's since I started counting. There was a lot before that I didn't count, and I've never not succeeded in removing a block. So what kind of things does a block what does a block do to you as you're trading? Here are the trading problems. Entering too soon, entering too late, exiting too early, can't increase size, increase frustration, depression, beat self up. Those are subconscious fear reactions from, I'm afraid I'll miss out. I'm afraid I'll be wrong. I'm afraid it will go against me. I'm afraid to lose more money. I'm afraid I'm not good enough. I'm afraid I can't do this. So these blocks have an effect on your inability to shake off bad emotions, ineffective learning because it's constantly your learning is being filtered. You don't know what to trust or not to trust, and it's being filtered through the block. You can go into an emotional fog. So it slows your pace down to learn. Inability to learn and modify trades. It's really good for repeating losing trades. You go into avoidance on losing because the brain doesn't even want to talk about it. You're in protection mode. So your brain is avoiding the loss altogether. It avoids you looking at it, examining it, changing it, doing anything related to it. You just want to put it on the back burner and jump into the next trade. Slow reactions, missed trades, and overtrading and blowups and much more. I've had traders that literally freeze. Had a trader call me, Robin, I've tried everything. I went to psychiatrist, therapist, whatever. I heard you could fix me. So, well, what's wrong? He says, I haven't taken a trade in 3 years. I'm sitting in the trading room for 3 years and I can't take a trade. I said, how much did you lose? He says, I lost $175,000 in one trade. He says, but that's not a lot of money for me. I'm a multimillionaire. I said, well, it was enough to stop you. He says, ever since that day, I haven't been able to trade. And he was frozen, paralyzed, and couldn't pull a trigger. And he was describing exactly what he was going through. Took him through the process. He missed the next coaching call. I called him up because I was worried what happened. And I said, Hank, what's happening? He says, oh, I don't need you anymore. I said, what are you talking about? I said, you have some more coaching sessions. He says, I took 6 trades today. The first one was flat and the rest were positive. That stupid thing works. I never heard from the guy again. I don't like to coach that way because other things can happen when I remove the block. At some level, the block protects you. So I like to put in things in place. So I'd never offer just the blockbuster and no coaching after it because I've had people go totally the opposite. They couldn't trade at all, removed the block, and then they blew up their account. So I don't like to do just the blockbuster. So everything that I have in my products lists it with coaching, several sessions. The excitement of the market can cause you to be the fear of missing out. Excitement from other traders, that can have you go in. And the seduction of winners and being right. The P&L trading syndrome. Don't look at your P&L as you trade. Swelled head and enlarged ego from multiple wins and P&L gains. A winning streak. A winning streak can cause you the same problem to think you're invincible. And you go into what I call the Superman syndrome. And so you can overtrade and think you're going to get the next trade back if you have a loser, and all of a sudden you give back all the great profits you just made. So there are different things that happen with each trader based on their mindset, their experience, and how they've been trading. Okay, 75% of your reactions is coming from your subconscious memory. The mind is the bedrock for everything we do and experience in life. A trader becomes vulnerable when their normal intellect and the thought process is being replaced by emotions. If you have any emotions whatsoever, you've got a block. Being aware of all of emotions is the first part of management and control. Using the mind to support your trading disciplines creates a positive process. We all possess the power to choose and control what and how we think. We also have the potential to shift our focus during the trade with mindful management and to learn how to do that and to ensure the best outcome. There's a fundamental element to managing trading emotions. The mind accumulates what we put in the form of billions of neural connections. What controls the ability to react to the market's changes? The mindset, your thoughts, the ability to react to what you see. The bottom line is the mind and stored thoughts dictate all that we do by simulating feelings and influencing how we react. Nothing happens without a conscious or a subconscious thought. Thought can support us or work against us within our trading. So control is essential. Your mind has the powerful power to make sense of confusion all on its own. I'm going to show you an exercise, and this is coming to the end here, so we'll go into the markets. This exercise illustrates the unique ability to fill in the gaps and make sense of things automatically. Our brain is on this constant, and we have this inherent ability, and this is amazing power. And I love this exercise, so I'm including it on everything. So I'd like you to try this with me, please. I'd like you to stare at the 3 dots, the red one, the blue one, and the white one. Keep staring on it. Don't look at anything else. Keep staring at the dots. As you're staring at the dots, I'm going to give you instruction and tell you that I'm going to change the slide. I'm going to tell you that there's going to be a white slide, and then there's going to be an X in the middle of the screen. So you know exactly what's coming. Keep staring, keep staring, keep staring. Keep staring at those 3 dots. I'm going to count back from 5, and on 1, I'm going to change the slide. Keep staring, keep staring, keep staring. 5, keep staring. 4, keep staring. 3, keep staring. 2, keep staring. 1, I'm going to change the slide. Keep staring at the dots. How many saw the Mona Lisa when the white screen came up and in color? Please type in the room. Yes, 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 yes. There was no color on that screen. There was no image of color on that screen. The only thing that you saw was a negative. Now go back. That's the only thing that you saw, and it was a negative. The mind filled in the blanks. It had no idea what the colors were. It didn't look at the painting, but it put in the colors appropriately. These are the things that they're now understanding about the mind and how it works. And I just love this exercise. Now, this is a simple negative to a white screen, and it shows you what your mind can do. So now think about you looking at multiple trading screens, and within those trading screens, you have multiple windows. Multiple windows. And your mind is looking at those windows, collecting the information, and trying to make a decision in a trade. If you don't give it guidance, if you don't control it, if you don't have a strategy and process from beginning to end on your entries and exits, your mind is going to fill in blanks and give you sometimes wrong information. You won't even know. Do you want me to do this again? Keep staring, keep staring, keep staring. Keep staring at the 3 dots. Keep staring at the 3 dots. 5, keep staring at the dots. 4, 3, 2, keep staring. 1. Here she was again. That was courtesy of Brain Games. They did it on the television, and I just was in shock and created it myself. So any final questions around the trading? I'm going to go now, and I'm going to show you 2 slides that are on the products that I have to offer. Yeah, the intensity will diminish related to the focus. So that's a great point. So know that your ability to focus gives you more accuracy. And that was a great observation. So focus the second time was less, and so it didn't stay as long. The longer you stay there, the more you see the color for a longer time. Because what does it do? It creates the neural connection and it imprints on the brain in that neural connection, and it's stronger the longer you stay with something. Okay, doesn't that make sense? Okay, so you can put up your questions, and I'm going to go at this moment. This is my information, but I am going to put it at the end, at the final end. We're going to go to the live market when I tell you to. But these are ways you can reach me. You can reach me by email. Please feel free to go to my website. There's an emotional trading test in the top right-hand corner that will calculate. I'll actually give you an assessment if you have a block in the top right-hand corner, and it's free. If you need to discuss things and you're in Europe, we can do it via Skype. That is my Skype ID. I do it all the time. And when I do my coaching calls on Skype, they get all recorded and I send you the recording. Why? Because you're only going to remember 30% of what we talked about. So you'll be able to go back and review that. And my the program that I'm the most excited about, and I've been doing for the last year and a half now, is called the 30-Day Trade Accelerator Series. It's 30 days intensive, and I only can take a limited amount of people because this is a lot of work for me. Nobody does this in the business, and you've got to be experienced, or I'm not here to teach you a strategy, a platform, or anything like that. I'm there to remove any emotional blocks, get the strategy that you have working, and have you getting good results. So during that time, I remove the block. I teach you a tracking methodology that pinpoints errors within your trading specifically so you can change. Yes, I do coach for traumas. It depends on what it is. I will tell you if I can do it or not do it. It depends on the person and what's going on. But yes, I have coached people in different situations of trauma. There's 6 hours of webinars that I do in that 30 days, and we break it apart. I teach you how to create a trader's identity because your body will support and react to a strong identity. But if we have a bad identity, we need to reverse it. So we reverse the traders and build a new trader's identity. You have technically 3 sessions that are live that we record on Skype, the blockbuster, reading the market evaluation, and then at the end, the 30-day assessment. Yep. Yes, we're going to move in a second. Hold on. Okay, and there's also an offer from the Miller Dayne Trading Network. I work with Don Miller in a trading room there. It's a futures room. And if you wanted to try that out, you could do that for a week. I've been working with them for the last year. I only do the psychology, and all the guys in the room will teach, a strategy. Okay, go to the live markets. We're going to go to live markets, and I'm going to coach on the fly. And we're going to be using the MetaTrader 5 when we do that. So Colin's going to pull up a screen, and I'm just going to coach on the fly.
Okay, can you hear me?
Yes.
Okay, excellent. So thank you so much for your presentation, and just want the folks in the room to know what they're looking at. Here in the US, we just had the FOMC release, which is federal policy on interest rates. And
Okay.
as you can see, the market sold off, quite rapidly while you were going through this. So I think
what was the news?
Let me just pull it up here real quick. Give me a second. Hang on. Let's see what their policy change. Let's see here.
I didn't see it come up on my
Yeah, I didn't
screen.
see it come up, the release yet.
Does anybody know what the announcement
Yeah,
was?
I'm just looking it up right now. We still might have a little bit of time before the release. It looks like that. It looks like that was the
Oh, so the China deal may not be done this year.
right,
So that was one. So that's important because everybody's been waiting for the China news.
right,
And what's happening there. But if you saw Trump earlier today, he doesn't care because the tariffs that he's put in place is bringing into the U.S. huge amounts of dollars. So what he's done brilliantly, I mean, it's amazing what he's done. Those tariffs that he has coming in and the heartburn that was happening with the farmers have now, he's offset that. So he's compensating farmers with the money that he's getting in so that that's being balanced, and he's just going to increase the tariff. So he's fixing anything that he comes across here that's been affected by the China
right.
the relationship. He's now compensating for with the tariffs.
So now
So
the question is, since we know that that everything that he says and tweets is volatile to the market. For instance, we still got FOMC coming up. Thank you,
right.
Andreas. Now that this has been digested in the market,
Okay, so we've got
using
30 minutes. We got
right,
30 minutes. So
right. So how do we trade this? How, let's say
okay,
I'm a
it's very
rookie.
important.
I'm a
Very
rookie,
important.
right? I'm
First
a
of all,
rookie, and I'm
rookies,
looking.
new
Right.
traders don't trade
True.
before an announcement,
Right.
especially FOMC. Don't trade before the announcement. You have to wait for the market to receive the information, trade a little bit, have it work a little bit, and then see how it settles out.
Right.
So right now we broke a major support level that I can see on the screen. I don't know what that number
Here,
is.
I'll grab a line. We'll put a line in here.
Yeah, put the line, go up, 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 and I'll tell you when to stop.
Okay. And I'll make this bigger as well. You think right about here under that
No, go down.
Go down.
The level that it broke.
When it started to break from here.
Yeah.
Okay. So let's snap a line right there. That's
No, up, up, up.
Move it up. Okay.
Yep, where those two little bottoms are.
These two little bottoms right
To the left.
yes. I see right here.
Yeah, but the bottoms.
The bottoms. I got it right there. 3108.
Go to the beginning of the screen.
Oh, sorry. I see what you're saying.
See the two little bottoms.
Right here. You're talking about right here?
Yes.
In here.
Yes.
Oh,
right
okay.
there.
So that's 3104.
Okay. So the market came down, found support at that level, went up, couldn't go higher, came down, and it just channeled for a while. So it was in a box in that.
Right.
Oh, don't move it around because
okay.
Keep it where it was.
Right. Got you.
Okay. So then as it started to go up, it broke through the high, and it continued to find a resistance level, which it did at the top. What's the top number there?
That top number is like 13.
Snap a line 30, there.
Snap a line right here.
Top.
Pull it down, the very top. Right
yes.
There. That's okay, 3118 half, right. Roughly.
Okay. So in reading the market, it's like a ping pong ball. It's going to go to the bottom, bounce to the top, bounce to a support level. As it started to pull back, it came to a level and go somewhere in between there.
Okay, snap another line.
Yeah, I'm going to tell you.
Hang on, let me grab the line. So at the top, draw a horizontal line. All right, tell me where you want me to put it.
Go up.
Up. Keep going.
Yeah.
Okay.
Up.
Keep going.
Right about there.
Right there. I'll snap it right here and pull it into place. Right there where it broke.
No. Go down.
Go down a little bit more.
little bit more.
Okay. Right under here.
Right to the bottom where those two candles hit the same support. The two
No,
candles.
the two candles right here. These
Yes.
two right
Yes.
here.
Yes. Yes. Yes.
Got it.
Yes.
Okay,
Yes.
so that's 3110,
Okay.
3111 roughly.
Okay. So it broke out of the previous resistance just before those two candles, and it found the resistance level. We snapped the line at the top. Then it came down because it was looking for support. It looked for support right at that line, which is almost, not precisely, the resistance prior. Actually, it's resistance from prior around where you have the word ticket. See the ticket at the bottom?
Down here. Let me see. Hang on.
You have the word ticket, time, type, volume. So see that resistance right there at the top where ticket is, and we have that line snapped? It hit that line. So when you put your lines in and you're looking for levels, look for where it hits prior. So it hit that prior and it found it again and it touched it with those two candles. Then it went up again, found resistance a little bit higher, and then the news came out. And so it came down and it found a little bit of support a bit above the middle line. It found a little bit of support a bit
right
above.
In here, like right. Let me move it right here, right in there.
No, up.
Keep going
Yes.
up. Okay.
Yes, right there.
Okay.
It found a little support there, but when the news came out, it couldn't hold. And that's when you got the downdraft. And it broke a resistance level it had done previously, and it broke several resistance levels that it was hitting on the way up, or support levels it was breaking support levels on the way down from previous support numbers. They might not have been big ones, but that bottom line that we snapped was one, and that showed real weakness. Right. And now it's finding a support level again. And so if I was coaching somebody to read the market to show strength, we'd have to have higher highs and higher lows, some basic stuff.
Right.
And I'd be looking also at previous lows lower than the bottom of the lowest candle.
The bottom of this lowest candle right here, down here where my cursor is.
Yes.
Okay. So let's just say I'm a rookie, right? I'm a rookie. I come in here and see all this excitement, and I'm like, you know what? I'm gonna sell two right there. Accept the terms and click OK. We're just pretend I'm a rookie. I just sold them.
Okay.
You can see on my thing here. Boom. Okay. I'm short two from 30.92.5. You can see the arrow. Total rookie, because I got caught up in the excitement. Now, what's my next step?
Okay. First of all, you should have a plan, which you don't have, but you should have a plan.
I'm rookie, right?
And you should have a stop.
Okay.
That's takes out the high of the current candle.
The high of this current candle.
If you're in there on that current candle, what's the time frame?
This is a 1 minute chart, but I can flip
it to
no, it's a 5 minute chart. It's a 5 minute chart.
It is a 5 minute?
Yes,
Okay, I don't make decisions to trade on anything but a 5 minute or higher.
Okay.
Because there's too much noise.
Right.
So a chart decision on a 1 minute, on a tick chart, a 1 minute, a 3 minute, less than 5, it's going to give you a lot of data and noise.
Right.
And you'll make a different decision than you will on a 5 minute or higher.
Right. Okay.
So the higher the time frame, the less the emotion.
All right, let's go to a bigger time frame. Let's go to do you use 15 minutes?
No, go to the 1 minute and the 3 minute, because a lot of people go less than more.
Right. Okay.
They don't have the patience to do.
All right, here's a 3 minute chart.
More.
Okay, there's a 3 minute. So clearly I was dead wrong selling it down here at the lows, and I'm paying for that dearly. So now the key is,
Go
Where's
to
my
1
stop?
minute.
Go
Go
back
where's
to the 1
to
minute.
go to
Okay.
the 1 minute.
Time frame. Let's go to minutes,
And
and we're
and
gonna
make
go to
the bars a
1.
little bit bigger.
Sure. And then we just drag it this way. There you go.
Okay, so see how that's a different picture altogether?
Sure. Mm-hmm.
Okay, so you look at a 5 minute for the decision on entries and exits
Mm-hmm.
or higher, and anything less, you see the direction or things start to develop.
Right.
So if I was looking at the one, and I have a 1, a 3, a 5.
Okay.
So if I'm looking to enter a long because we've had a big move down and I looked at other indicators and it was telling me I should go long, I would look at the 1 minute and make sure that was making higher highs and higher lows on the 1 minute. Then it spills over into a 3 minute,
Mm-hmm.
and I'm looking for higher highs and higher lows there. And then I wait for it to hit and take out the previous highs on the 5 minute. So
Right.
this is now developing to go long. So let's go to a 3 minute and see what that's doing right now.
Okay. Let me jump over there. Time frame. 3 minutes. Okay. So now we're on the 3 minute chart.
So
Mhm.
for us to be strong that it's going long, it's got to take out the high of the previous candle. So it's got to take out the high of that green candle before the one we're on.
This one right here.
Right there. It's to show any kind of strength. It's got to get above that. If it can't get above that, then it's not going to go, you're not going to go long.
Right.
Or it's not going to go up. It's not showing that it's going up.
Right.
But again, before any kind of announcement, you don't want to be in a trade, and I can't tell you how important that is.
Right.
Okay, now let's say if you entered that trade, do you have a mark there where you entered it short?
I do right here. This red arrow shows that I'm short 2 from 32 and a half.
Your stop would be 1 tick below the tail of the red candle before.
1 tick below the
red candle.
I'm short, so 1 tick below here.
Oh, sorry, the long. So you'd be 1 tick above the green candle.
Okay, right here. So I go 1 tick above, I right click, I go to trading, and I want to put in a stop loss. And so that would be at 30.95.75.
So what's the length between the entry and the stop?
Roughly 3.25 points.
Okay, if you're new, you should not have a stop loss more than 2 points. So immediately that would disqualify you from putting your stop there. And if you realized you made an error and got in too soon because you were in the fear of missing out,
right,
then you manage the trade and work to close it and minimize the loss.
And here you have a close button right on the dome. So you can either place a buy stop above the market at that 30.95.75 right here.
No, well, no, I would. Your goal is to get out as fast as you can.
Right. So then boom,
you're wrong.
hit the close button and we're out.
Right. Because you need to decide that what you've done is wrong quicker. Right. And that only comes from experience. If you're holding on to that trade and waiting for it to make a lower low and the lower high, you're in the hope, wish, pray trader zone. That's no good. Another thing you can look at is you look at your dome, or you can look at time and sales and see where the order flow is going.
Which is off to the left-hand side here, viewers.
Right. So we've set that order flow for 10 and above. So this is where the bigger traders are going and what they're doing. So in general, most of them is like pink, and that's to the upside. They're going higher, and the blue is to the downside.
Well, actually, the blue are the buyers. So you've got the sellers are hitting the buyers,
right?
And when it's all pink,
right,
the sellers are in charge. Blue, the buyers are in charge.
Right. Yes. So, but
So
if
now,
you're buying it,
now, yeah, now it looks like the market, the sellers are going and hitting the buyers, which if you look at the chart, it's coming almost back to my original entry points. So I
right.
have a question for you as a stubborn rookie.
Mhm.
If I see it go through my original entry where I took a loss, do I want to try to tempt fate again and try
No,
it here?
no, you're wrong, and you didn't have a plan.
Right.
The plan, you're in a very tight, you're just trading to trade, to
Hmm.
be in the game. You're not trading to win. You have to trade to win.
Right.
You've got to know your levels, and the levels are not there for you. The range is way too tight. This is a sit and wait and see area.
Right.
Sit and wait and see. And that's the hardest thing for new traders to do because they want to get in the game. Another place you can look at is immediately in switch, if you could switch that volume to 1,
Which the volume?
the volume on the time and sales,
Oh, sure. Okay, hang on. So right
because I
click
want
on
to
the
show them
chart.
the difference in the way the look is.
Right.
Okay. See the difference in the colors?
Yeah. It looks
You have a whole different,
like more
you,
buyers are coming in.
it appears,
Right.
but it's only one contract, two contracts. It's not a lot of contracts. So you have a misreading of really where the big guys are going from the individual orders. So I wouldn't set it at such a low contract number.
Mm-hmm.
Additionally, if you look at the inside market prices, can you just kind of put your arrow around the inside market there on the dome?
Yes, you're talking about in here?
Yeah, just kind of circle around what the inside market is.
Sure. The inside market right here, where the current bid and offer is.
Right. So where it's blue and where it's pink.
Right.
So those two prices, notice the volume to the left of that, and if it's reducing or it's increasing. That's another thing to look at to see what's happening.
Right.
So that's another way to do it. When I first started to trade, I only traded from time and sales. I never traded from a chart. We didn't have charts in the old days.
Right.
I know that sounds crazy, but we didn't.
Dennis had a thought.
With
in the
news
chat.
coming, why put on more risk in this directional move? Better odds taking profits before FOMC. Always, if you know that you made the wrong decision, always take whatever profits you can or minimize the loss. Why add short here? No, yeah. So you wouldn't add short. You wouldn't add to the shorts here. Or you could be prepared to enter the short.
You could work sell stops underneath the market.
Or you could be prepared to enter the long, depending on what happens with the news and how the market reacts to it. But you don't do anything now. And so you would not enter a short here, based on what's coming and based on what your charts are showing. There's nothing to show you. So he's going.
Yeah, we're not in a trade right now. It's only marking. So what this platform does, it marks where I got shorts, and then the blue is where I got out for a loss.
Right. He was just showing, where you're getting in and just trying to do an example. But that's not how I do it when I do my coaching. We're just grabbing the market at the moment for what it's doing. And if you were working with me in the market right at this moment, you wouldn't be doing anything, zero zip, and you'd be watching what happens. You'd be observing. And you would know strategic levels from the past that may give you a direction of how to trade. So in that 30-day process, those are things that I teach you, and those are things that we go through, but I have to make sure you're not filtering your decisions through a block. We have to remove the emotional block first. And most traders don't even realize they've got one. So with that, I'm going to show you if any questions here so far, but thank you, Dennis. I really appreciate that. So no, we wouldn't be trading right this second if we had a choice. Okay.
Did you need me to switch back over to your screen?
Yeah. Could you do
hang
that?
on. Yep, hang on. There we go.
Okay. Any final questions on the markets in general, on the programs? With those questions coming in, I'm going to switch to my information again. Please feel free to take the emotional trading test. It will show you if you have the block or not. And there's also some free presentations. One I did last week under video media. And there's some holiday specials that I'm offering through the end of the year only for that 30-day program. I'm actually taking $1,000 off that program. And it's a fabulous program. And if you have any questions on it, we can discuss it. And it will, I had of that program, and I'm just going to put it back up there. Of that program, 58 people have graduated. Again, I don't take very many. If I only have one person sign up, they get a private thing for the 30 days. You're in constant contact with me. You do, I believe it's 1820, and payments can be split if that's needed. And you can go onto the robindayne.com site under products, and you can, the products will show you, the products, go to products, it's in the bottom left-hand corner, and it will give you a full description of what's happening. But if you have any questions, please email me, let me know. Everything is done on Zoom. When we do the presentation 2 hours, you do not get a copy of the 2 hour, you take a lot of notes. And the one-on-one sessions are all recorded and sent to you after our session, so you have them. They're typically scheduled for 1 hour, but I've gone over that many times if we are stuck. You send me results every week. I give you feedback every week. I give you a specific way to track the quality of a trade. Most traders track by the dollar amount. The dollar amount doesn't get you to what the problem is within your trading. My system rates the trade quality and pinpoints exactly what you need to fix. So, you know, for a very simplified explanation, a 1 is the best, 3 is the worst, and every time I start the 30-day, people have 3s. By the time I end, I've had, I think, only 1 month where I had anybody experience a 3 by the end of 30 days. So the quality of their trade has drastically improved. And if the quality is there, the money follows. You don't want to focus on the money. You want to focus on the quality of the trade. How many are using MT5?
Yeah, I just want to check. I see by a show of hands, those of you that are left, and it's quite a few. And again, thank you for your attendance. How many are using MetaTrader 5? Okay. Right. A lot of our U.S. customers use Sierra charts or multi-charts, but for our European traders, it's predominantly MetaTrader 5. But if you'd like to try MetaTrader 5, and it's easy to set up a demo because the demo is inside the platform, you simply click File, New Account, New Demo Account. You can do it as many times as you want, and it also comes with free historical data. So, wink, wink, keep that to yourself. Okay.
And I'd like to know, did you enjoy the presentation? And do you see things within your own trading that you know you need to change? I'd just like to have some feedback from people that are there. Or you're all asleep? Are you sleeping? Thank you.
No, I think it was very good. It was a very good presentation, Robin.
Okay, I hope you enjoyed it. You can, I guess, see it where?
Yes, you'll be able to go back to our webinar site, and let me grab the link real quick, and then you'll be able to grab a recording. I won't do the recording yet until we're done here, and then it'll save the recording. Okay.
Thank you so much. I work very hard to get this in a way that traders can actually understand it. You know,
Right.
you have people that are in the psychology field, but they don't trade. So they don't know what traders are going through. And
Right.
there are people that trade, but they don't have a process. So that's why when I put together that 30-day, I said, what are traders really missing? They're missing a process. They're having an emotional block. They're trying to grow and learn and change what they're doing, but they don't have an approach. And so that 30-day gives you a foundation that you can use forever, and a process that you can use forever. I don't care what system you're trading on. It works for any system, because I don't get into the trading system. I work with what you're doing, and you make the modifications to your system. It's your trading, and everybody is different. We could have, you know, over half the room on MetaTrader 5, and everybody using it differently, and everybody's seeing different indicators and having some that work or don't work. So everybody's different. So I don't work to give you a strategy. I help you work on your strategy for your personality. So visit my website. There's a lot of free presentations on there. You'll get even more information on. Again, the psychology doesn't change. And I'm always doing something new. We're having new things come onto the website. Keep checking back. And it was an absolute pleasure to be here. And thank you to everybody over the pond. Maybe you'll invite me out there. I'll do some presentations in Europe.
Excellent. Thank you so much. And
there's a link. There's a link on the Don Miller site. It is in my resource area if you wanted to check that out. But I think it's, I think I gave it to you. There's the link right there. MillerDayneTrading.com/subscribe/. But you can find it that way.
okay,
And just
excellent.
and tell him that you saw it here, because he'll say, where the heck did you come from?
Right.
Okay. So have a great day, guys.
Thank you again,
Watch-
Robin. Thank you, and for the attendees, thank you for your rapt attention. And
thank you, Colin, for having me. I really
you're
appreciate
welcome.
it.
You're absolutely welcome.
Okay, have a great trading day, and watch out for the announcement. Watch the market move. You're awesome.
All right, guys. Thank you so much again for attending. And does anyone have any questions for AMP? If you need anything trading wise, let us know for AMP Global EU. I know some of you are US clients, but again, we're making great forays into the European market. Tons of support. MetaTrader 5 is an excellent platform. It's easy to use, and more importantly, it's free. You've got this powerful tool at the tip of your fingers, and it's absolutely free. So if you need anything, I put the download link in the chat window. You can always email us webinars@ampglobal.com. There is a difference between global and USA. With AMP Global Europe, you've got more access to CFDs, cryptocurrencies, and things like that, things you don't have access to in the US markets. So, and you can access all that stuff with MetaTrader 5. Okay, so keep that in mind. And yeah, again, Robin, thank you so much, and your insight into the market. And yeah, all right, guys, watch out for FOMC coming up. And if you need anything else, please don't hesitate to contact us.
Thank you, Colin, so much.
You're welcome. All right, guys, I'm ending the webinar. If anybody has any questions. All right, and we're out. Thanks again. Have a good one. You can, yes, you can go to normal AMP from Europe. You can carry both accounts. So just go to our website, and you can get the information there to sign up as a client. Okay? All right, excellent. Have a good one. Have a good evening.